Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here from Top and Stock Picks at Zacks alongside my colleague Brian Hayes. Today I'm looking at Lamb Weston, which trades on the ticker LW. Lamb Weston operates a somewhat boring business, but boring is something every investor needs in their portfolio. So Lamb Weston has been in business for roughly 70 years, and it spun off from Conagra back in 2016. The company is one of the largest suppliers of frozen potatoes in the world, selling really an endless array of potato-based offerings from French fries and beyond. It sells those frozen potatoes to restaurants and retailers around the world. Its growth has been rather impressive outside of a small COVID-based downturn. And simply put, fries, potatoes, and potato-based foods are core menu items at restaurants around the world and in the U.S., and they're also likely filling up many freezers and homes around the world. Lamb Weston topped our quarterly earnings and revenue estimates in early October, and it upped its outlook. Yet the stock had been hammered since the summer as Wall Street took profits after a massive run, and it also suffered kind of amid the broader downturn of consumer staples stocks. So with that said, Lamb Weston's now sitting at some levels that might make investors want to consider diving into the frozen potato producer. So I'm going to go over to some Zacks screens to take a look more at Lamb Weston. So we're going to start by looking at some of the price performance. So we can see over the last 5 years, LW stocks up about 17% versus the consumer staples Zacks sector, which is down around 2%. So we can see it was on this massive run over the last year plus, and then it took a bit of a dive. But if we go over to some technical charts, we can see that the stock is fighting some support. So it hit these really oversold RSI levels not too long ago and was trending down to that 200-week moving average, but now it's trending back in the right direction. So we can see if we go a little closer to now, it jumped above that 50-day moving average as it's trending back in the right direction. So we see it found support on those longer dated trends, and it's heading back up higher. And then if we look on the valuation side, we can see that its valuation levels are looking pretty juicy. So we'll do forward 12-month earnings in terms of how Lamb Weston's looking. So we'll go back to that 5-year chart here, and we can see that Lamb Weston's currently trading at 15.7 times forward 12-month earnings, which puts it at a discount to the broader consumer staples sector, despite that big outperformance over the last 5 years. And it's well below its highs of about 39 during that time period, and not too far above its lows of about 12.3, which it hit back at that COVID downturn. So Lamb Weston's valuation is certainly starting to look pretty impressive there. And now we'll go over to the Zacks.com page, so we can see that it's currently a Zacks ranked number 1 strong buy, and its industry is in a nice spot in the top 40% there at the moment. So we'll go ahead and take a look at some of our estimates for Lamb Weston. We can see that the company is expected to do about 29% revenue growth this year to get up to about $6.9 billion, and then do another about 5.5% growth next year to get all the way up to $7.3 billion. And then on the bottom line, we're calling for about 25% adjusted earnings growth this year, and then another 6+% growth next year. And we could see that its earnings revisions are trending heavily in the right direction, and that it beat by a big amount the last 4 quarters. And then if we go over to its snapshot, we can see some of these longer term trends in terms of where its earnings revisions are headed. If the page wants to load for me here we go. So we can see that these earnings revisions are trending up that was 2022, 2023, 2024, and now 2025. So just these long-term earnings revisions are trending higher and higher for Lamb Weston, so that's a great sign. We can see, as I said, those big upward momentum for the current fiscal year and the next fiscal year. So that's a great sign. And if we go over to our price targets, we can see that the stock's currently trading at a 33% discount to the average Zacks price target. And 6 of the 7 brokerage recommendations that we have are sitting at strong buys. So overall, Lamb Weston also announced back on October 11th, a series of near-term and long-term initiatives. So some of these efforts include a commitment to returning more cash to shareholders by targeting a dividend payout ratio of about 25% to 35% of net income. And it recently announced a newly increased $500 million share repurchase program. So overall, Lamb Weston's frozen potatoes are poised to keep humming through the good economic times and bad, since its offerings are really staples in various cuisines and meals at homes, restaurants, and beyond. So that does it for this segment of Top Stock Picks. Now I'm going to send it over to my colleague, Brian Hayes.
Thanks, Ben. Brian Hayes here with our other Top Stock Pick of the week. I have another exciting pick for you, so let's jump right in. My top stock pick this week is engaged in the Homebuilder business. The company operates in some of the country's hottest markets, including Florida, North Carolina, South Carolina, Colorado, Texas, and the metropolitan Washington, D.C. area. The company I'm referring to is Dreamfinders Homes, ticker symbol DFH. Dreamfinders Homes designs, constructs, and sells single-family homes. This company also provides insurance agency services, including escrow, closing, and title insurance. Taking a look at Dreamfinders Homes industry group, this company is part of the Zacks building products homebuilders industry, which currently ranks in the top 18% out of approximately 250 industries. And because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months, just as it has throughout the year. And we can see that this industry has handily outperformed the market this year with a 43% return. Quantitative research studies suggest that approximately half of a company's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. Also note that stocks in this industry group are relatively undervalued, as we can see here. Moving to our snapshot page, we can see that Dreamfinders Homes is a Zacks ranked number 1 strong buy stock. The Homebuilder has surpassed earnings estimates in 3 of the last 4 quarters. DFH most recently reported third quarter earnings just last week of 75 cents a share, a 27.1% surprise over the 59 cents per share consensus estimate. Dreamfinders Homes has delivered a 122.72% average earnings surprise over the last 4 quarters, and incorporating this most recent beat last week, that figure jumps to 131.6%. So they've been consistently beating earnings estimates, and the stock price is reflecting this. Dreamfinders Homes stock is outperforming its industry group this year, and we can see below that analysts covering DFH are in agreement and have been raising earnings estimates recently. As we look ahead, estimates for next year have been increased by 0.38% in the past 60 days. The 2024 Zacks consensus estimate now stands at $2.62 per share, reflecting potential growth of 10.3% relative to this year. It's exactly the type of trend we want to look for when narrowing down our list of potential stocks. So Dreamfinders Homes, ticker symbol DFH, is my top pick of the week. This company has flown under the radar but is rewarding investors with substantial return. I see more upside for this company ahead, as well as the Homebuilders group in general. From Ben and I and everyone here at Zacks, thank you for watching. Make sure to tune in next week for more of our top stock picks.